This is going to be a video chart on SNPK, Sunpeak Ventures Incorporated, a stock that's been very actively traded and is a relatively new issue, meaning there's really no chart history, which is why we're just focusing on a 5-minute chart from the last 2 days. As you can see from this daily chart, the stock literally just started trading for the first time yesterday. So there's not much we can learn from the daily chart. So that's why we're going to talk about what we see on the 5-minute chart. Well, the stock started around 30 cents and it's made a really nice move up to 60 cents already. So it's definitely got some serious momentum behind it. A ton of volume, as you can see on the daily. So 160 million shares traded on the 8th and 100 million shares traded yesterday. So some serious money flowing through this thing as it is being promoted by some of the biggest stock promoters in the business. So let's talk about support and resistance on the 5-minute chart. So you can see over the last, since Thursday, there's been a series of higher lows being established on the intraday chart. And we're going to talk about these 5 levels that we have identified as being the key support areas and why we've identified them. So you can see the stock on Thursday made a move from 30 cents up to 48 cents and then pulled back to this range here on 43 cents and did some consolidating. So that was a good support area right there. And going into Friday, this is all you had, right? So you had Thursday's action from 30 cents up to about 48 cents. So this high here, where this green line is a green line, right? On Friday, going into Friday, this was actually resistance because that was the high from the day on Thursday. So the stock went from 48 down to 43, got knocked down. So that day's high was resistance. But then the next day, the stock gapped right over it. It opened at 48 cents. So previous resistance is always going to become new support. So that's why it's now a green line as we're looking at it right now. Okay, so we gapped over 48 cents, which was our support, and we didn't really pull back for the first half hour or so. We went from 48 straight up to 61, and then pulled back down to 52.5 and then bounced. So support is always going to be a price at which the stock bounced from, because that's where you expect there to be demand again. The fact that the stock bounced from 52.5 cents back up to 59 cents means that there was a lot of demand at 52.5 cents. Support is always where you believe there is demand. So after we saw this bounce, now we know that there is demand hanging out at 52.5 cents. So that's a key support level, which is why we have outlined it here with this green line. So then after it made that bounce, it came down to 54 cents. And then it bounced again. So now through the first, through 12 o'clock on Friday, the stock had bounced from 52 and 54. So then once we got this bounce from 54 back up towards 60 again, we can say moving forward, okay, just like there's demand at 52.5 cents, as represented by the bounce up back towards 60, there's demand at now 54 cents, as represented by another bounce towards 60. So that was really bullish that we had a higher low put in. Demand is coming in at higher and higher prices, which is exactly what you need for a stock to sustain its trend higher. So then, that's why you can see after it pulled back from 62 cents or so, where did it find support? Right around 54 cents at a previous low where we thought there would be demand again. There indeed was. So therefore, these two lines are key support for trading on Monday. So first it's 54 cents, and then it's 52 cents. Now say Monday it opens around 60 cents, and then goes down to 56, and then bounces and goes up towards 70. Then we're going to move another support line up to, 56 cents. We're going to always keep establishing support at where the price has bounced from, or when it breaks above previous resistance. So this is the support side of things. So key support in our view is 54 cents and then 52 cents. Below 52, we could come back to this 48 level, and below 48, it could really fall a little bit down towards 43, and below that, we would be very concerned about the overall play if it really falls that hard. Really, we don't want to see it go below 43 cents, and that would be worst case scenario. Ideally, it's not going to drop below this 52 to 54 cent range, but if it does, you still have this support here at 48 cents. Okay, so that's the support side of things. Now let's talk about the resistance side, which luckily for the bulls and for anybody holding this stock, there isn't that much. So the stock closed at 59.5 cents, and what's great is on the support side you have numerous levels of support, which is always good. And what makes a chart especially bullish is if it has very little resistance. If there's a lot of support and very little resistance, then the stock will have an easier time moving higher. Support represents where demand is, resistance represents where supply is. So if there are more areas on a chart where there is demand versus areas on a chart where there is likely supply, then the stock will likely have an easier time moving higher than it will moving lower. Simple supply and demand. We do have two levels here. The first one is this high, right around 61 cents. That was our first resistance level. You can see it couldn't get above it here, couldn't really get above it here, and then here it did break above it, but it didn't really push much past it. It hit 62 cents, so that created another resistance level. And then here towards the close, you can see it got up to 61 cents again before closing around 59.5. So that 60 to 62 cents is going to be our main resistance. That's where there is supply. That's where when the price gets up to that level on Friday, it wasn't able to move much higher. So 60 to 62 cents is our key resistance. And if we can break above that, you can see on the daily chart, then it's really, just, again, anybody's guess. We would envision if it can break 62 cents, it probably has a good chance of testing 70 to 75 cents, just because psychologically, to us, that would be the next step. Once you can't really plot resistance, meaning there's no chart history to go off of, you want to put things in terms of psychological perspectives. Where are people likely going to be selling? Well, 70 to 75 cents, that's a round number area. So psychologically, there will likely be some supply there causing resistance if the stock is able to break above these resistance we pointed out. Now we'll break things down in terms of volume. We're looking at a 60-minute chart. You can see at the open on Friday, so within the first 30 minutes it had traded 20 million shares. That's very good. Now remember, in terms of supply and demand, we need new demand to take out future supply. So all this volume here, 160 million and then 100 million, that is demand on these 2 days, right? But at some point, one would think whoever bought these 2 days is going to want to take profits, assuming they have them. So in order for them to take profits and still have the stock go up, you need a amount of volume that is close enough to the prior volume. Okay, you need new demand to take up this volume that is going to at some point be future supply. Okay? So therefore, what we would like to see within the first half hour of trading, which if you have a 60-minute chart, it'll be denoted on this candle right here, this very first candle on Monday. You see where it says 9:30? You'll have a candle bar right here. We would like to see greater than 20 million shares trade within the first half hour on Monday. That would indicate to us that the demand is keeping up and that these people will be able to take profits without causing the price to decline. See how anybody who bought this day was able to take profits without causing the price to decline on Friday because there was so much demand on Friday as well. So we'd like to see that same trend continue. Okay? So we want to see on Monday, like we said, more than 20 million shares trade within the first half hour of the day. And you'll be able to pick that up by watching your 60-minute chart at 9:30 because it'll go until 10 o'clock. So that will, provide the information you need. If you really want to break it down, you can look at the 5-minute chart and you can say, okay, the first 5 minutes of the day on Friday, it traded 5.7 million shares. So we want to see it trade more than 5.7 million shares the first 5 minutes of the day on Monday. Or you can break it into a 15-minute chart. And you can say, okay, the first 15 minutes of the day on Friday, it traded 12 million shares. So we want to see it trade more than 12 million shares to the upside. We should mention that everything needs to be to the upside because as long as it's to the upside, then it represents more demand than supply. But if it's volume coming into the downside, then it's representing more supply than demand, which really doesn't help us. So we want a green volume bar, not a red volume bar. Sorry I didn't state that earlier. And on the 15-minute chart, you want more than 12 million shares trading within the first 15 minutes. So we've given you everything you need in terms of price points for support and resistance, and we've told you what to watch for in terms of volume. So hopefully with this information, you are ready for the trading day Monday, and you can trade accordingly.